why don't you kick us off, man? I'm excited for the conversation, especially just the general payment space. There's a lot of change there, right? But you would, man, kick us off with a little bit of your background and how you got where you are.
So do me a favor when you do this, man. This is so cool. I really want you to I love grassroots people, and they're
Yeah.
one of us, right? And this whole paratrooper background, man, this is just great stuff. I want to
Right.
hear this whole story.
I'll try and stick to the salient points. I guess my world into business and then payments really started growing up in a family that owned independent retail stores, so like a grocery store, a bakery, a clothing store. And I guess when you think about payments, the way I like to think about it anyways, it's a medium of exchange, right? It's the swapping of something for goods and services, which makes payments really. And so I saw that up front, like really close up, where people were buying everyday goods and services, their food, their clothing, whatever it was. And I guess like I started my first business at 17, my second at 24. In between there, like I had some health issues, so I didn't finish school. Like rolling forward pretty quickly, I went to the military, came back, taught myself my kind of high school equivalency, got into University of Cambridge, which is a well kind of known school here in Europe. Well, I'm not in Europe anymore, but over there in Europe. Yeah, and I guess through that, I did a bunch of internships in financial services. I got to see like how money moves on a forex, trading floor. I did equity research again in retail, so I got to learn like how retailers think from like the shop floor to the boardroom. And I worked at a payments company after that, where we integrated into retail systems. We were doing like mobile payments back in like 2013. This was like before Apple Pay even launched. All these things kind of came together to make me realize that half the world was unbanked. Payments really difficult to interoperate with, especially when it comes to setting up cross-border or new countries. The banking system, the card networks are really kind of set up for the 70s and kind of running kind of like on 90s technology, really. And so going back to those original experiences with the retailers, like if you could connect directly and you could talk to a retailer directly and you could digitize that whole experience, you could provide like a lot more efficiency, a lot more data, a lot more interoperability with any emerging digital store of value. So that's like a quick part of history about like how I kind of got into the space and why I'm in love with payments, I guess.
Man,
I love it, man. That's great. Will you dig in a little bit? So, I mean, my one of my personal favorite topics, the interoperability and just banking technology. And I think as we've watched, much of the, sort of the alternative fintech realm explosion, I'm thinking of the Coinbases and the Robinhoods and the Chimes, right? And that sort of emerging fintech crowd. I think a lot of that world has been shocked at the lack of interoperability, the
Right.
difficulty in integration. Actually, we've seen a really cool kind of infrastructure rise of, right, folks kind of in your realm that are solving that problem because it's so messy. So just what have
Yeah.
been your thoughts and experiences looking at all the struggle that we have here around those connectivity challenges?
Yeah. So I think it starts with acceptance.
Hmm.
And so you think about the whole point of money again is to exchange it for goods and services, and typically the mainstream economy are only accepting mainstream currencies, right? So you kind of have to think of it from there. So banks are issuing fiat, currencies that are backed by particular governments, and then you kind of have card networks that are interoperating between the banks, and that's kind of where we start. And everyone's trying to kind of either offer an alternative to that or break into that some way. But as you guys know, I've heard you guys speak about this a lot. Like the banking system is difficult to work with. It's all a bunch of wall gardens. Everyone's owning their own ledger. And so this is where like the promise of cryptocurrency came in, where like the ledger is public and anyone can program it and anyone can verify. So that was super exciting. But the promise of Bitcoin or cryptocurrency was not just the security and the programmability, but if you can't spend it, then it kind of lacks the utility. And I think utility is the watchword. So, some markets have tried to leapfrog the banking card networks. You see that a lot in Southeast Asia, in Africa, where they use a lot of airtime credit and things like that. Um, and so now you've kind of had the rise of these alternative rails or alternative methods of exchanging value or storing value. And I hope like the next decade, we're going to see like the real interoperability of all of that. And companies like Runa, where we're not only building our own infrastructure, our own ledger to move money around, our own rails to settle that money with any merchant anywhere without the card and bank networks, but really importantly, for our customers, for the end recipients, enabling the interoperability between all those different walled gardens, so to speak, so that you can move in between them really easily. You can get the utility. I mean, one of the kind of examples I like to give is if you're paying out, say, freelancers or affiliates, the payout in America is going to be different to the payout in Nigeria, which will be different to the payout in Argentina, because they all have their own local issues, like the local language of money. And so I think the opportunity, which is where I think we're going with this, is how do you build interoperability? You've got to make all the pipes connect with each other. You've got to make it seamless and secure. You've got to make it easy for the end user. You've got to enable settlement and conversion across all these different walled gardens. So yeah, we've had, like, as you say, like the rise of all these other opportunities, infrastructures that are coming along. And they've done some incredible things. I think interoperability is like the last mile now to make the full realization of those opportunities come to life.
This is so good. I mean, we've got the Genius Act where I think this thing is going to get passed at some point, which B of A joins in and, says their blessing. Chase, what was it, last week or so, they came out and said, well, we're going to go ahead and participate in all this. And I'm going to tell everybody, open disclosure, I'm not paid in Bitcoin yet.
Yeah.
But, when you think about, you guys have a massive network of merchants. And when you begin to look at, I kid around with everybody when I try to explain this to people about go buy a hot dog, right? And can you buy a hot dog? Well, it's going to take, your debit and it's going to pull that from your bank account with your, okay, what if I wanted to pay in something else? If I wanted to do this in another way? And having that ability is spotty at best. Some do, some don't, some can, some can't. When we get past this legislation piece, everybody sees that it's going to, first, you're talking about just turning Bitcoin into something that it's not today. So as whether you want to call it a store of value or whatever. Now, if I wanted to buy a house with Bitcoin, maybe I want to get paid a different way, but I want to make a purchase over there because I've got an investment vehicle that I've used to accumulate wealth in that area. Or you have currencies and governments and all the craziness that goes on there. Not really sure where the hell we're going with all of that in Europe right now, because I mean, Putin's a little spooky on what that could turn into or resolve itself. I don't know, which creates confusion and risk in its own way. And I think everybody sees that the SWIFT system and how we're going to move the money in the Forex side of this, that's fairly obvious. It's the local things that you're talking about. How I want to get paid as a like an Uber person that says, I want to get paid out today I work 3 hours and I'd like to be paid today, but I'd like to be paid in Ethereum or something, right?
Right.
I mean, is that what we're talking about here?
I think so. I think there's a lot to touch on there. Like when it comes to people being paid, we just released some research around like independent workers. If they don't get paid on time, I think 40% of them start to look for, like reduce their hours. And if I'm not mistaken, like 70% will like actually look to switch platforms just because they're not being paid fast enough, right? And then you add in the layer of how do I want to get paid? So like we see, I think it's 50% of all independent workers would love to be paid in some alternative value other than fiat if they can get some kind of extra incentive or bonus on top, which is something that we offer, right? So here's $1,000, 500 goes into your bank account, another 200 can go into your Walmart, but you get 5% on top. Another 300 can go into your Nike to buy your sports gear for the month or whatever. You get 5% on top. Like there are all these opportunities when it comes to commerce. And that's what we're really talking about. It's like, how do people interact with each other on a commercial basis? That's what payments are enabling. And I think going to what you're saying, so like taking that forward to like, how do I want to pay for my house versus how do I want to access something else? You mentioned confusion, and I think the antithesis to that is trust. So how do we build trust between all the parties here so that with certainty that whatever store of value is being used as a medium of exchange is going to be backed up on the other side when you receive it and still hold that value? And I think that's part of the interesting and challenging kind of emerging frontier of payments is like, how do all these different stores of value maintain not just the ability to be exchanged with each other, but that trust, that certainty when you go and exchange it yourself with someone else, it's going to be accepted, it's going to hold the same store of value. It's kind of why stablecoins are really exciting for emerging markets because when you have inflation in say places like Argentina, that the stablecoin in USDC is going to hold its value. And that's like part of the elements that we have to take into account when trying to construct this whole new way of thinking. So you have whatever store of value matters to you in your local area language. You have the ability to interoperate and move that around between the stores of value. You have the need to make sure they're trusted and will be exchanged and honored in the same way down the line. So like there's a lot to do, but if you can do it, man, there's like a whole world of opportunity that you can unlock that, we're kind of only dreaming about 5 years ago is kind of starting to come to reality today.
So help me out with something. I know I got this messed up somewhere. So we've got, Tether and different stable coin issuing going on, US, DC, all these things that happen. And then we have a United States stable coin. Does that make stable coin more stable?
Wow. Well, it depends who's running it, I guess, and how reliable, and again, the trust point and
Okay,
like how
so when we have a transaction that happens, there's a fee associated with that. And
yeah,
we're saying, okay, I've got two questions, I guess, or two things rolling around in my head here. If I was to say that I had, let's just say I have 100 widgets of currency and I wanted to take 50 of those widgets of currency and hold it in a US stable coin, by default, that would make my currency stronger, correct?
it would make the stablecoin currency that you deposited in stronger because it would be backed by more widgets, I guess.
You got it.
And that's
Okay.
the trust point
Yeah, I didn't
again.
want to say pesos or whatever.
Yeah,
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 you got it. And then if I'm able to get into a system that's moving those transactionals in and out of that stable currency, a
yeah,
US stable coin, and I'm not paying the same fees that I would through these other parties,
yeah.
more efficient, it's cheaper, it's better, and it's more ubiquitous. Am I seeing this? Where am I seeing
Yeah,
this up?
I
Is
think
that
that's right. No, that's all right. I think
okay?
an easy way to think about this is you it's all about trust and going really into the guts of money. We value the US dollar based on the ability for US taxpayers to keep paying in, right? And we know that based on the strength of that economy, that the US is going to honor its debt, it's going to honor whatever it issues when you use it again in that system. And so you can think of like all money as just like a version of that. And when we have these other stores of value, they're sitting on top of dollars, pounds, euros, right? Because ultimately, the way that the economies are constructed today, it always comes back into some kind of fiat. Now, that might change, right? But even stable coins, like one of the reasons why cryptocurrencies weren't adopted and stable coins are being adopted is that you have this really clear relationship between the unit of value of a stable coin and the unit of value of whatever local currency it's backed up by. So, I mean, airtime credit, gift cards, loyalty points, stable coins, they're all like another, I guess, digital layer with certain properties that the recipient cares about that gives them benefits that they care about. But ultimately, it's backed by some kind of underlying currency. And so I think like that's where we are right now. I mean, governments are super worried about that changing. That's why Facebook Libra program got shut down like pretty hard because that could have upended everything. But at the moment, that feels like the model that we're moving towards. Like there'll still be the unit of value issued by the government. They'll still have control of it, inflation, monetary policy, and so on. But consumers are moving much faster. They have different needs. They have different desires, and they can be fulfilled by the kind of programmable layers of digital value that's still on top of the underlying government-backed currency. And so I think like that's where we're going. And to your point, if we can move from like having to trade and exchange in the government currency, which is slow, expensive, complicated, regulated, into these other programmable stores of value, which are simple, they are instant to move, they are cheap to move, they are data rich. Then you get lots of the benefits that you're talking about, where you're saving on the fees, you're enabling people to be paid like in real time, on demand, maybe like on an hourly basis, right? Without it costing any more. You can give consumers rights to certain benefits that they otherwise wouldn't have, like a loyalty program, but programmed into your money without having to have a separate account or so forth. That's where a lot of the I guess interesting like Web3 tokens come into play. So yeah, there's just so much here that we could do. I think the point is someone needs to come into the market, and that's what we're trying to do at Runa, and like not only put the pipes together from like the traditional rails and the new rails, but also work directly with the people who want to exchange the goods and services so that the exchange and the settlement and the reconciliation are all super reliable, trustworthy, and instant. Because that's where most of the friction is like moving the money from one party to another just to be able to get access to whatever you're trying to buy. So yeah, there's like I say, Runa, we're trying to do that. by integrating directly with merchants, integrating with all these other stores of value, making them all interoperable in one simple API on a global basis. So you as a business can send money to anyone, anywhere instantly, and they can immediately spend that with any merchant on the network without touching a bank account, a card, an app, even an account, right? You can just do this all as a simple store of value on a ledger that we represent on your phone without actually having to do anything else. Like you don't have to download anything, you don't have to set up anything. This is the future, I think, of money, where it's instantly moved, instantly spent, instantly settled, all like in real time, all really cheaply, all in a really data-rich way that opens up lots of opportunities for everyone.
Yeah, this is huge. So everybody that's maybe trying to keep up with what we're talking about here, let's just talk about in good old US of A. I got my bank account, I've got my savings account, checking account, all these good things, maybe even the money market. And then we go to your wealth management side. You own Tesla stock or this stock or whatever. These things are fairly interchangeable and fairly quickly, even though they're completely separate markets or worlds or way to look at capital. And then we have this other thing that comes along. Okay. And it does well with itself, but there's a super delay and a transactional problem that exists between them. As this gets legislated, as this gets regulated, those problems all they dissolve. Am I on the right path here?
Yeah, and I think the reason why the regulation and the legislation matters is because it allows you to bring in liquidity into the market in a way that's trustworthy. So the reason why you can instantly sell your stock, right, your Tesla stock, and then get cash for it in real time, is because that market has a huge amount of liquidity. In fact, many pools of liquidity, depending where you are in the world. So at any time, anywhere, there's a person on the other side. And so like that's what we have to bring in, that same, I guess, infrastructure, same level of regulation, security, I guess the ability again to trust the system so that you can do that with any store of value, depending where you are and what it is. And that's what you see with like the promise of, I think it was Tether that promised like $1 to $1 to Tether, and they had a little bit, there was something I read a few years ago where that was challenged and are there dollars backing every Tether? And like
Right.
and that's what you want to see as a consumer and an institution that you can rely on the currency that's being issued. So like to your point, you can definitely bring like that real-time liquidity element into any store of value, but you have to have the regulation, the guardrails, the ability to enforce good governance and so on. And so I think that's what we'll start seeing in these other parts of the market in the next decade.
Can we hit loyalty and rewards a little bit more? I love this portion and topic because to me they've always we use them like interchangeable words and they're actually opposite to me. It's like I use rewards if my brand has no loyalty, right?
Right.
Okay. So the thing I've always thought about rewards is we're trying to pay people out of what's very interesting here is if I'm not a financial services brand, let's say I'm a grocery store, right? I can use margin from tomatoes to yield rewards that likens itself to financial services and expands the breadth of my brand, translating into loyalty, right?
Yeah.
Kind of looked at this trend from the merchant side a lot, and it is the weirdest thing to me as you look at that topic, brands becoming bank loyalty-ish. I don't know the right words. It is a very interesting move because as a banker, you have to ask a key question of, are these actually my partners or merchants,
Right.
virtual customers, or are they my competitors? Or some other version of partnership, a frenemy, right? It's very interesting to watch that kind of evolution. I think people like you are probably got it more right and are closer to it than the rest of us because you're kind of coming at it from a little bit of a side, right? But at the end of the day, it's how are these brands working with consumers to make themselves wider, right?
Yeah.
And coming at that loyalty, rewards, financial services aspect, it really makes them stickier, which begs the question, does that make everything else less sticky, right?
Yeah. So lots to unpack there. I think let's start with like every company, especially consumer facing companies, are probably going to become their own version of a financial institution over time. Like this idea of every business being a fintech. And I think like merchants on the retail side are really well placed to do that because they have all this. What does every financial institution or bank want? It wants activity, it wants recurring payments, it wants people depositing more and spending more and going through that cycle. Who has the most of that? Merchants, retail merchants, you're spending there every day. So it makes a ton of sense for them to try to leverage their position and build out like more financial technology, which is something we help them do on, I guess, the stored value side, so that they can acquire more consumers, have them spend in their stores. So what Runa does is it sends out balances in the form of either gift card or airtime credit or something that you can go to a merchant with and spend. And then they get the loyalty, they get the recurring payment, they get the increase in basket value. So from a banker perspective, I think, yeah, you kind of look at merchants as an interesting substitute because you can now store your money at the bank or you can store your money with that merchant. You know it's going to be honored with the goods and services. One of the other things you said, which I thought was cool, is the just idea of playing with the margins, right? Like this is all about commerce at the end of the day. Like some people like to think about payments as this dry ledger movement. You know, I'm moving money from one bank here in Singapore to another bank in the US. But fundamentally, all of that is powering some kind of purchase or like commercial activity. And so merchants have this other advantage where they have the margins, right? So $100 at a bank is $100. $100 on a merchant could be worth 110 in goods and services because they have the margin to play with. And so that's where like what Runa's doing, I think, is really interesting because when you pay out in a typical payment product, let's say it's $100 payout, you're paying the $100 just like the bank is, plus all the fees, which can be anywhere between $2 and $50 on top. When you pay out with Runa, $100 may only cost you like 95 because we can share the margin that the merchant has with you, or you can give the recipient 105 extra, right? So the economics are really interesting in terms of like driving loyalty and spend when you can operate directly with a merchant outside the banking and card networks. And then like that's the other cool thing about merchants using their own branded currency, as it was once called. This idea that if you drive someone to spend, maybe you're giving them 100, but they're spending 250 in your store, depending on the use case. Typically, merchants see like 30% overspend. So it's like a really interesting strategy to drive more, I guess, incentivized behavior that's positive for your bottom line. And so like there's so much you can do when you start to abstract money away and think about it as like the bridge or the medium of exchange between consumers and businesses selling services. Like you can play with margin, you can offer extras, you can reduce costs. Like there's some really cool things you can do there.
Yeah.
This
Yeah,
is so cool.
it's great.
And I for the longest time talked about never underestimate, the small business, even the big business, and their ability to be creative in what they want to do. And all of embedded finance and everything that we're talking about is it's the ability to fight with money instead of fighting with fresher produce or better meat selection, or we have more guns, or we have different kind of knives, or we have different whatever, right? Now we can actually get in there and compete and fight with a little bit of the marketing budget as well. And the thing that you ever have that moment where you just feel like such a dumbass, And it's like I get
Every morning.
yeah, right. So the grocery store can come in here and give me a debit card and give me 5% off these things, and we can do all of this. And it literally never crossed my mind until just now that we could be doing that with alternative currencies, not just, I shouldn't say alternative currency. How about Bitcoin? Let's just make it easy, right?
Yeah.
That I might get 5% off if I use a regular, or if I went through this method, I may get 6% off.
Right. So I think it was Grab Wallet in Asia that did something where if you loaded your wallet with PayPal USD, you got some bonus on top. So like that's one example. Um, Here's another cool one, like it's like staking. Have you heard of staking in
Yes.
cryptocurrency? Like so basically you can earn some kind of interest on there. Like imagine you purchase with a merchant in a cryptocurrency and then they could give you some kind of benefit of 2% off because they're making 5% on the stake. You know,
It's a
there's
CD.
all these different cool ways of slicing and dicing this up.
Yeah, yeah, it's like
For a
the
regular person, if you just looked at your credit card and said, okay, it's MasterCard or it's Visa.
Right.
All right, when we go to checkout, if you select PayPal, you get more. If you select Ruma, you get more, right? So there's other ways to make
Right.
the thing
You
work.
want-
It's just not, it's like the first layer of the onion. We hadn't even talked about an onion yet. And it's
Well,
like,
something that really blew my mind. I've been saying this for a while, but I didn't fully understand what I was saying until last week. I think the checkout is going to disappear.
yes.
Um, and what I'm hearing or understanding is like Visa are building all these kind of capabilities to allow AI agents to pay for you. So you never even see the checkout. You're like, I want these things, go out and find the best price from the best merchant and this quality, and then it just happens, right? So even the ability, payments is moving fast, but even the ability to choose as a user what you want to do and get the reward back, that might become programmatic as well. It's like a real frontier moment, I think, in payments, not just on like the interoperability, but how we move and how we choose as consumers has got to be automated for us in many ways too.
And the thing that is just kills me, guys, is banks are afraid of this. And I'm like, this is the moment where you're in the greatest driver's seat in history. But if you don't get in and drive, they take the car away. Everyone around banking has figured out, oh my gosh, banking is vertical integration for me as a merchant. This is how I vertically integrate. I get it. Okay, now that that cat's out of the bag and it's a foot race, whoever helps their merchants do that the fastest is going to be rich as shit. And if you don't, you're not going to be here anymore. It's
That's
Right.
this
it. Exactly.
Right.
game
Yeah.
over, man. I mean, this was done.
Dude, that was the greatest small rant. Perfect.
I'm sorry I'm pissed. I'm like, there's so much opportunity. Go faster. Yeah, it's great.
I mean, yeah, that just creates opportunity for companies like us, like
Yeah.
Runa, to come in and try and change the game, just not only in the kind of store of value side, but the exchange of value too. But I think like for everyone, like this is why it's so exciting to be building, because there are opportunities that the incumbents are, for whatever cultural or other reasons, unable to execute on. And so like, the more that we can, do this kind of thing where we're thinking through the problem sets and the opportunities and socializing what's possible. I think the more we're going to get adoption and start to create some new innovative ways of doing things, which I think the banks, like you say, it's super frustrating because they hold a lot of the power in the market, but you see that changing pretty quickly too.
You bet.
Aaron, why don't you come to the roundup this year, the FedBiz roundup, and meet with some of these innovative bankers and kind of talk through some of these things with everybody. It's a great place for everybody to mingle and mix, and we could use a guy like you.
I'll take you
Yeah.
up on that. Thank you. I'll
Hey,
bring
I want
I'll
to
bring
give
my
you
hat.
a couple, yeah, man, or we'll get you when we're there. I want to give you a couple minutes for final thoughts. And if you wouldn't mind, I know I looked a little bit and you've given a couple of cliff notes on some of that study that you did and some
Yes.
interesting findings and things. So you kind of wrap some of that in there, man, but take the last few minutes for some final thoughts.
Thank you. Yeah, I think some of the stuff we covered today is like there's a huge opportunity to kind of reinvent access to money. And whether that's like creating more interoperability between these different stores of value, whether it's integrating directly with a merchant to enable the exchange of value for goods and services, and then layering on all those kind of cool opportunities, whether it's like margin or bonuses or data or like different ways to kind of interact with the consumer to drive that loyalty. I think there's like a huge opportunity in the market, and that's what we're trying to do. We're trying to integrate with every merchant everywhere. We're trying to add these different off ramps to our network, whether it's push to card or prepaid or airtime credit or stable coins. Like, so you as a business or a consumer can send money to anyone anywhere instantly and be able to do that in a much, I guess, more seamless, data rich, cheaper way. And kind of reinvent the kind of way that we think about moving money around. So I think like for us, we see that a lot in the studies that we're doing. Like consumers are demanding more independent workers, I guess, in this case. They're demanding a lot more from the payment providers they're working with. They want instant, they want more flexibility and utility. They want it to be relevant in the local market. There's so many, I guess, areas of improvement that are, I guess, not only being demanded, but possible to deliver. And that's exactly what we're doing. We're enabling like real-time instant transfer value to anyone, anywhere, in any format that they care about. And then the ability to use that value to actually buy goods and services, which I think to wrap up is really what payments for me is all about. It's like that underlying enabler to exchange value for the things that you care about, the things that you need, and not just like a dry leisure movement. It's like it should impact like hundreds of millions, billions of people like every day who are spending and moving money around to live their daily lives. So I think that's why I love payments. That's why I think it's a really exciting time to be building, and that's why I think Runa is delivering something really important to the market, and
I
super excited
agree.
to share that with you.
I love it. It's like a new theme like gravity that underlies payments and
Right.
the energy of commerce, man. It's really cool. I
Yeah.
love the way you look at it.
Yeah. Thank you, guys.
Thanks a bunch, man. We really appreciate you and appreciate all you're doing.
Thank you very much.
Fantastic.
Thank you.
Really,
It was
really
great to
appreciate it.
meet you both. Thank you so
All
much.
right. We'll see
Appreciate
you
it.
next time, buddy.
Bye.